Hello, my name is Benjamin Z. Miller, and in this video, I'm going to talk to you about the bankruptcy of Red Lobster. So, some bad news. If you haven't heard it already, Red Lobster has gone bankrupt. But why did they go bankrupt? What happened? Well, good question. We'll go through that in this video. So, just to review the history, this is an American restaurant, Red Lobster. It was created in 1968. They had their first restaurant in Lakeland, Florida, and it grew and it grew and it grew over the years. But actually, they recently filed bankruptcy. This affected dozens of their restaurants. They had a long period of time where they were really struggling, and there were a lot of factors that influenced it. Of course, the COVID had a big negative impact, rising costs. And then they also lost a lot of money on a promotion, endless shrimp. They lost millions and millions on those endless shrimp. But they filed Chapter 11 bankruptcy, so they're going to restructure things. But it's something where they had reported between 1 billion and 10 billion in debt in the bankruptcy filings. And it was actually reported by the distributor Performance Food Group. They are claiming that they are owed more than 24 million. Red Lobster's sales had overall stalled in the last decade, according to the magazine Restaurant Business. They had sales that were between 2.3 to just a little over 2.5 billion every year since 2014. And then, of course, COVID came in 2020, and that really hurt. 7.6 billion drop in revenue. But they always faced a lot of competition. There was Chipotle, Chick-fil-A, a lot of new chains as well. Very competitive industry, very difficult business, the restaurant industry. And then, you factor in the pandemic, the rising labor costs. All of these things were working against Red Lobster. Their current owner, Thai Union, has cited industry headwinds and rising labor and material costs for its decision to sell the chain. So, but some of Red Lobster's costs, there were a lot of different factors in place. And of course, the endless shrimp promotion did not work out so well because people could eat a lot of shrimp. So they filed on May 19th, 2024, not only for Red Lobster management, but also for 14 of its affiliates. In 2014, Darden actually sold Red Lobster to Golden Gate Capital, a private equity firm. They sold for 2.1 billion. And Red Lobster spun off the real estate as part of this deal. It was arranged as a sale leaseback. I'll talk about that in the next slide, but it actually ended up hurting Red Lobster because they had leases that now they had to pay. So they were now having to pay rent, which further made the cash flow even worse. So Golden Gate Capital, they actually, in 2014, they purchased Red Lobster from Darden Restaurants. And this is actually an interesting thing because I can remember back in 2012, 2013, looking at this and thinking, Red Lobster, that'd be an interesting thing to try to buy. And I actually went so far as to have conversations with people to see if I could think through the best way to acquire this. It would be a great thing. And I wanted to actually take a shot at acquiring it. I had a lot of other things going on, and it was something that I never attempted. But I attempted it at the level where I did some calculations, and I was talking to some of my close team about it, but we never went forward on it. But we definitely can see why it looked like an interesting acquisition, an interesting opportunity. But Golden Gate, once they acquired Red Lobster, they divested the real estate assets. So they did a sale leaseback transaction for the amount of $1.5 billion. And now, as a result of that, Red Lobster has to start paying rent. It's another expense that Red Lobster has to pay, and they built in a 2% escalator on the rent annually. And this was another factor that also had some made it difficult for Red Lobster. This is, this sort of taking the assets of a target that you acquire and then kind of repositioning things. The idea of it is, well, Red Lobster is not in the real estate business. They're in the seafood business. They shouldn't have that real estate on the books. And then they end up selling that real estate. That asset goes off of the books. It generates, cash for the company in principle. And then you've got some leases, but over time it can also work against the company. So it's something that I'm not saying they did a terrible thing with what they did there. I mean, it's easy in business to sit around and criticize people. In reality, it's very hard sometimes to win. You've got a lot of things that are coming into play. They certainly weren't planning on that pandemic. They weren't planning on a lot of these things, but the end result was that part of the deal actually was something that made it harder to work, the workability of it. If you're interested in learning more about investing, if you'd like to meet other investors, I would like to invite you to join my group, the Benjamin Z. Miller Investor Networking Group. We have weekly meetings, and you can meet me and other investors from around the world. We have actually several hundred investors now that are in the group from the United States, from Canada, from all over Europe, a lot of different countries. We've got investors from Sweden, from Norway. We've got a great group, and basically we meet. The meetings are free. Every week we have them, and it's just a networking thing where you can meet different investors, where you can learn more about business, and where you can see some of the different techniques. We talk about actual techniques that work. So if that sounds interesting, just send me an email, ben@benjaminzmiller.com. Once again, that's ben@benjaminzmiller.com. I hope that helps, and I wish you good luck with your investing.